Hey, everybody. It is good to be here. My name is Brent Moors. Time for ThinkScript studies. I'm actually not the regular host of this class, but Mr. Mike Fairborn is, but I'm in for him today. So I'm happy to join. It's kind of a fun, different class, and it's a good class, and I'm glad to be here. Mike should be back next week, I think. But for now, you got me, and you also have Mr. Kevin Horner helping us out in the chat. I appreciate Kevin. He's a good friend and great knowledgeable trader. So as you have questions between Kevin and myself, we'll do our best to answer those questions. You can also follow us on X at Brent Moors CS, at Kevin Horner CS. Also, I'd invite you to join us on Wednesday mornings for Trader Talks. We team up, Kevin and I, on Wednesday mornings, and I think it's a good way to start your Wednesdays there. But I'm glad to have you all here. This is the first session of this class for this year. But let's go through a few important disclosures before we get too far into this. Options do carry a high level of risk and are not suitable for all investors. The information today is for general informational purposes only and should not be considered an individual recommendation of any security strategy or chart type. We will be doing technical analysis today, folks, but Schwab does not recommend technical analysis as the sole means of investment research. Paper money application is for educational purposes only. All investing involves risk, including risk of loss. And past performance of any security or strategy does not guarantee future results or success. So here we go, folks. This is the thing. We're starting off with ThinkScript, and you can go in as deep as you want on ThinkScript. We're not going to go in super deep today, but what I want to do is I want to take you through kind of, I think, a good starting point for starting to think about some ThinkScript stuff. It's a good way. We have a lot of new people beginning of the year here. Good way to maybe get your feet wet with some ThinkScripting stuff, and then Mike will take you the next step here. And Mike is more knowledgeable than I am. I'll be the first one to admit on some of the more advanced ThinkScripting stuff. But ThinkScript can give you a lot of things. You can do column scripts, you can do charting scripts, you can do scan scripts, customizing scans. And that's what I'm going to do today because I think it's the easiest entry point into ThinkScripting here. And I see some familiar names, and I'm grateful for all of you in my life. And it was good to see Will and Ricebird out there 2-3 weeks ago in Houston. So, but you know, here's what I want to do. When we look at charts, very often we'll look at a chart and we'll decide, and I'm just going to change this real quickly here. I'm going to edit this study. I'm going to make this a 20-day moving average, and I'm going to make it kind of a more bright color so you can see it. That's the bold line here, 20-day moving average. And as you look at this, and as you look at different stocks, you can see sometimes they're above that 20-day moving average, sometimes they're below that 20-day moving average. Lately, a lot of stocks have gone below that moving average. Sometimes they'll jump up above that 20-day moving average. Now, it doesn't need to be a 20-day, but it can be whatever time frame you want. Generally, shorter-term traders are going to be looking at shorter-term moving averages, and generally, longer-term traders are going to be looking at longer-term moving averages. And that can be a signal for you. Okay, we're going to start off basic. We'll get a little more complex than this. But let's say we want to scan for a stock that's crossing above its 20-day moving average. Okay, fair enough. Let's do that. Let me go right here, and I'm just going to go to the Scan tab, Stock Hacker. I'm going to close out of this. Now, this first thing I'm going to show you, there's actually more direct ways to do it than what I'm going to show you, but I want to show you the process that we're going to use as you're thinking through ThinkScripts. Okay, so I realize there's a pre-built one that we can use on this, but that's not what my point. My point is I want to show you the process you can use. On your Stock Hacker, if you click on Add Filter, I'm going to go to Study. Now, you have to be on the live platform, not the paper money platform. Now, technically, this is paper money because this is not real money I have here. But this emulates a live platform. So if you do this on paper money and you click on study, it's going to give you a message. It's going to say that it's not going to work. Okay. So let me just knock that question out of the way right out of the way here. Okay, right off the bat. So let's say we want to find a stock that's crossing above its 20-day moving average. Okay. How do we do that? Well, you go to add filter, click on your study filter, and it's going to pull up this ADX crossover. Why ADX crossover? Because alphabetically, it's the first one on the list. We're going to change that though. So I can switch this. I can click on this if I want and switch it right here if I want. Or I can just click on this little pencil right there, and it's going to bring up this right over here, Condition Wizard. Now, if I want to, I'm going to delete that out. I could just start typing in script under ThinkScript editor. That's a much more complicated thing. We're not going to get into today. Use the Condition Wizard, folks. Use the Condition Wizard. And I want to add a condition here. And the condition is this. I want the stock to be crossing above its 20-day moving average. Okay, simple enough. When I click on select a condition, it's going to give me a choice, value, study, function, price. Now, which am I going to use? Say it to yourself in plain English. I want the stock to cross above the moving average. The stock price. I'm going to click on price and I'm just going to make it a closing price. Stock close crosses above. And what do I want it to cross above? A moving average. Well, is a moving average a price? No, it's not a function either. If you click on function, you'll see that's like math functions and stuff, statistical functions. Is it a value? No, it's not just a value. It's a study. The moving average is a study. Okay? The moving average is a study. So what I'm going to do is this. I'm going to go to simple moving average because that's what I'm using today. I could use an exponential moving average. And notice when I put that moving average in there, it defaults to a length of 9. A length of 9. I don't want 9. I want 20. So I'm going to make this 20. There we go. The stock close crosses above a simple moving average of length of 20. Now, I'll talk about some of these other settings here in a minute. But keep in mind, this is a simple moving average. I'm going to save that. And it's going to go to this page. Now, notice something on this page. Aggregation D. That D stands for day. If I change that to W, that's going to be week. Here we got day though, and I'm going to click on that and I'm going to click on OK. And now I'm going to run the scan. And it's going to come up and it comes up with a bazillion stocks. Okay. Well, I'm going to limit this down. I'm going to scan in. I'm just going to make this, we'll look in the S&P 500. How about? Okay. S&P 500. And now when I scan that, I have 50. I still have a ton of stocks here. These are all stocks that are crossing above their 20-day moving average. Let's just look at Airbnb and ABT. Okay. ABNB crossing above its 20-day moving average. Remember, that's that red one. Well, I forgot the next one on my list. ABT. ABT. Okay. And there we go. We're crossing above that 20-day moving average. Okay. Fair enough. That's a simple way to start, but it's actually not going to be the most common use of this probably. Probably a more common use is to use a study called a moving average crossover, where one moving average is crossing above another moving average. Now, I'm just going to tweak this study just a little bit here, and I'm going to make this instead of a 20-day, I'm going to make this a 40-day. Okay? And just to make it a little easier for you to see, I'm going to make this one a little bit bolder. So I'm just going to edit this guy, and we're going to make this, we'll make this a 2 there. Okay. So now I have a 10 and a 40-day moving average. Now let me go back to the S&P 500. Here's the SPX, a year chart, and here's kind of a common way that people will use it, traders will use it. This isn't a recommendation, but it's just a common approach to things here. When a shorter term moving average crosses above a longer term moving average, in this case, the shorter term is this 10-day in the bluish color. The longer term's in the 40. We can alter those numbers here. But when the shorter term crosses above the longer term, such as right here, and we don't have any others, some traders will consider that to be kind of a bullish or buy type indication. We'll say bull, okay? And I'm going to call this bull, okay? And in those instances where the short term crosses below the longer term, such as there, they're going to consider that more of a bearish indication or maybe a sell indication. I'm not saying buy or sell. I'm just saying this is how some traders view this, okay? Here's another bear signal there. Okay, there's another bear signal there. And, oh, look what we got. We got one right here, okay? Bear signal there. Now, so let's think about this. We already had one. So if indeed we decided, well, I'm just going to do this as buy sell, we would be in this trade from there to there, okay? We'd be out from there to there. We'd be in this trade from there to there. We'd be out from there to there. We'd be in this trade from there to just a few days ago. Okay? And this, visually, that looks like it would have turned out okay. Fair enough? Now, I don't know if that's better than just buying and holding this the whole time. I don't know if that's better, this 10-40-day crossover. This is a 10-40-day moving average crossover. Than doing a 5-30-day moving average crossover. There's different, a 10-30-day moving average crossover. There's different ones you'll see. I often will use a 10-30, where the 10 is actually an exponential moving average, and the 30 is a simple moving average. Okay? Sometimes people like simple moving averages. Some people like exponential moving averages. Sometimes people like whole moving averages. Okay? So there's, in general, just quick thing. Simple moving averages are basically you take the last X period of days. So 30-day moving average, you're taking the last 30 days closing prices and divide it by 30, okay? Add them all together, take those 30 periods, add them all together, divide, it gives you an average of where it's been in the last 30 days. Exponential is a little faster moving than that simple moving average. Exponential kind of does a similar thing, but it weighs the more recent data more heavily. Whole moving average is even faster than the exponential. This is a very fast moving average, okay? So there you go. So how do we do that? What if you want to create that? Now, before I create this right now, I'm going to do a 10-40 crossover to try and find stocks that meet this, maybe a buy condition right now, or a long condition or bull condition, however you want to consider that. I'm going to show you how to create that. But realize, maybe a 10-40 is not your thing. That's fine. If you want to do a 5-30, just follow along, learn, and you can make it your own, okay? So here's what I'm going to do. I'm going to erase this guy. I'm going to add in a new filter. Add filter. And by the way, while I'm doing this, there's a survey link in the chat. If you'd fill out that survey, we appreciate your feedback, folks. Just fill out the survey. Again, it's going to be a study filter. I'm living in the study filters today, okay? So study filter, and I'm going to edit this guy. Brings up the window. I don't want this ADX crossover. I'm just going to click on add condition. And now I want a moving average crossing above a different moving average. Before I chose price because I wanted a price closing above a moving average. In this case, I want a moving average closing above a moving average. Make sense? Study. I'm going to do simple moving average. Again, I could do EXP, exponential moving average, if I wanted to, but I'm not. In this case, I'm going to keep it simple. Simple moving average. How long at simple moving average? I want the shorter term crossing above the longer term. So I'm going to go simple moving average length 10. Well, it starts as 9. We're almost there, but we'll make that a 10. Okay. Crosses above a study. Yeah, another study, a simple moving average again. Simple moving average. And I'm going to make this one a 40. If you want a 5 and 30, you'd put 5 there and 30 there. These are both simple moving averages. And now, could I, if I wanted to, say, put 40 here and 10 here and put crosses below, it would give me the exact same thing. If I put 40 here and 10 here, but changed crosses above to crosses below, it would give me the same results. Okay? I'm going to click on save. And here's the script. If I ever want to take this script for something else, start with the condition wizard and start and use that as like the blueprint for something else. I can then click on thinkScript editor, copy and paste that over. Okay, it's simple script. But I'll tell you, this may be simple script, but for most of us, I want to know how to type this out so it works on this. It's a language. ThinkScript is a language, just like, Python is a language or Java is a language or whatever. This is a language. The condition wizard makes it so much easier. This is, I think, the way to start out if you want to learn this. Okay, I'm going to click on OK. Again, I'm going to leave this as S&P 500. I'm going to click on scan, see what we got. I got 4 results. Okay. AbbVie, Citigroup, FDS, Kellanova. Okay. All right. So let's look at ABBV. Okay. Here's ABBV. And sure enough, it's telling me we got a crossover right here today on that. Let's look at the next one. I'm not going to go through them all, but we'll do Citigroup. Here's Citigroup. Oh, here's a crossover. For those of you who are using something like this to talk about entry, this can tell me we had that crossover today on that. That's what we're looking for. Now, this is not the complete system necessarily. You have your system. I'm not going to tell you what system you should be using. I will say very often traders like to see things like trend going up. They like to look at things like support and resistance levels. You guys have watched my classes before, know that I beat on this quite a bit. And then often we'll talk about indicators. Okay, I'm just going to abbreviate indicators, IND there. Okay, here's our indicators. Our indicators are this moving average crossover. So if I wanted to, I could certainly go ahead and say, I want to buy this. I can simply right-click on the chart. I could buy, and it says I'm buying 100 shares. Maybe I want to tweak that. Just click on edit. Maybe I don't want to buy 100 shares. Maybe I want to buy 20 shares. Type in 20 there. And maybe I only want to buy at $70 or less. Okay, so I'm going to put that as a limit price. And let's see, market is not closed today. I'm going to make this good till canceled so that it goes on into tomorrow. I'm going to confirm and send, and I'm going to send that order. That's a bullish trade. Now, I don't have a stop loss on that. You may consider that. Stops aren't guaranteed, but that's an example of the indication of doing it today. Now, what about bearish patterns? Can you find bearish patterns? So, some of you, I'm not going to get into options trades really today, but I mean, it's not necessarily an option trade. Maybe it's an exit signal. Could you use this as an exit signal on a stock so that, when a stock has been going up like this, we'll go back in time here to 2024, early 2024. When did we get that? We got that signal there. Maybe that's a sell signal for you. I don't know. I'm not telling you what to do, but that could be used. Can we do that? Yeah, you can look at that. Or maybe you're looking to buy a put option or something like that. Again, study your options before you do that. That's all I'm going to say about options. You're looking for a bearish trade. That's how we can find a bearish trade. Okay, so I'm going to do this. I'm going to do a scan. Now, we'll start over just to give you practice on this, okay? Again, I'm scanning the S&P 500. You can narrow this down, of course, to a particular sector if you want, or industry right there. S&P 100, you could open the floodgates and do the Russell 2000 or something like that. I don't know. But let's do this. We're going to add a filter, a study filter. And I'm going to I'll just get rid of that. What am I doing? I'm going to add, I don't know what I'm doing here. We're going to customize it, okay? Here we go. We're going to customize this. I'm going to delete that. I'm going to add a condition. How are we going to make this bearish? I want my simple moving average. I'm going to go quicker on this one because we've already kind of gone through a lot of this. I'm going to say I want the 10-day. For bearish, it's going to be crosses below, though. Crosses below. And then, again, I'm going to do study, simple moving average. This is going to be 40. And we're going to save. Okay. Scan. We'll get different results. CRM Disney. Let's see how these guys look. CRM. Here's CRM. Ooh. Is that a potential cautionary note? Yeah, perhaps. Perhaps that's a cautionary note on that. And let's look at Disney. Disney, little cautionary note when we get the crossover. Yeah. Now, one moving average it's kind of famous, if you will, a moving average crossover that's kind of famous is a 50-day and a 200-day moving average crossover. 52. And so sometimes you'll hear something called a golden cross, golden cross, or a death cross. Okay, death cross. Okay. The golden cross would be when the 50 crosses above the 200. The death cross would be when the 50 crosses below the 200. Okay. Lois says there's a good first class for this. I'm trying to make this relatively basic here, Lois. And so once this is posted, I just encourage you watch this as maybe a starting point here. This is pretty about as basic as you're going to get on this one here. But I realize you're jumping in halfway through. But let's talk about this. 5,200. But let's think about what I have on here right now. I have a 10-day and a 40-day. But here's what I want you to think about. If I were to make this a week instead of a day, and 10 weeks, how many days is 10 weeks? Remember, there's 5 trading days in a week. Occasionally you get a holiday or something like that. So, but there's 5 trading days in a week. So if I take 5 trading days in a week times a 10-day moving average, that's 50 days. Okay? If I take that 40 week, 5 days in a week, and 40 days, or 40 period moving average, that's 200. So in other words, this actually, if I switch this from daily data to weekly data, I've switched it from a 1040-day moving average to basically a 5,200-day moving average, if I switch that to week. Okay? So these are simple moving averages. When we talk about death crosses, golden crosses, traditionally we're talking about simple moving averages. Okay, a question in the chat on that from Lola. Good question. Could you do exponential? You could do exponential. The reality is, I don't, I've looked at a lot of these, to be honest, and there's some days where I go, oh, I really like this, and there's some days where I think others may be more effective, and that's because there's a truth out there, and the truth is nothing out there works all the time, right? So at different periods of time, different things will work. But if I switch this from day to week, let me do week this, okay? Now, I just switch that, and I have 40 period, 10 period, but they're weeks, so there's my 10-day, my 50-day, my 200-day moving average. And you can see everything looks totally different now. Everything looks totally different. Can we scan for that? We can scan for that. So let me go back here. We're going to edit this. Let's bring this up. And so right now, let's edit that. Right now I have simple moving average, 10 crosses below. I'm going to go back to making bullish. I'm going to make it crosses above, 40 period moving average. Now, how long is those periods? I can change that right here from day to week. Click on OK. And by the way, if I didn't change it there, you can change it right here too. Okay. Now, let's scan that. Okay. We got 3 results. Longer term results. The 5,200 day or 1040 week is generally probably more longer term moving average territory there. HST, longer term, than kind of a, the trend, it's gone nowhere basically for, this is exactly where it was, what is this, a 3-year chart? 3-year chart ago. But the point is we got the crossover. That's what it's telling us. Let's look at WST, YUM, okay? WST, long-term crossover, YUM, long-term crossover. Again, not super significant, but there we go, okay? So there's your longer term variation on that. I'm not going to take the time to do it, but of course you could just switch that to you could switch that around to crosses below and get more of a bearish signal. Now, here's the point. Well, here's something else I want to make. Once you do it, I'm going to switch just for our purposes here. I'm going to switch this back yet again to a 1040 day. Once you have it how you like it, save it. Save it. You go up to the middle one of the 3 little sandwich, hamburger, pancake menu deals right up there. Click on Save Scan Query. It'll bring up a window, and we're going to say 1040 day cross over. Okay. So we're going to save that. Okay. I don't know why that just disappeared, but we just saved it. Now, the cool thing is, if I go to charts and I go over here and I go to my watch list, my personal watch list, there's going to be a 1040 day crossover there. That's what I just made. I don't have to update it each day. This is a dynamic watch list. This will change every day. Well, it'll change intraday even as the market changes, and give you updated results here. Now, for those of you who want this, I'll share this scan here in the chat, but I showed you how to do it. It's not that difficult. You can certainly do it yourself, but let me share this with you, okay? Those of you in the chat and share, this is not guaranteed for accuracy or timing, folks, okay? I can't guarantee it for accuracy or timing, but I'm going to put that in the chat here. And for those of you who are watching a recording, that's all right. I'm not going to leave you out. I'll share it right here. I'm just going to read this to you. Exclamation point DM0B3CWZ. It is case sensitive, so you need capital M, capital W, capital Z, if you're going to load that in there. Okay? Now, once you have that, you can copy that. You can copy the whole thing, or you just do the exclamation point on. Go up to your gear, click on Open Shared Item, paste it in there, click on Preview. Probably going to ask you to name it. Name it to something that makes sense to you, that's memorable, and then you can import that. And then it will show up in your scans. I just shared the scans. It'll also show up as a watch list for you, because that is now your watch list. Now, for a lot of you, you're going, yeah, I don't like this 1040. Well, what do? You go to your newly imported scan here, load the scan query as is, and then you tweak it just like I did. Click on the gear. This is what you'll see, something like this. Click on Edit. You change the time periods, or you change it from simple moving average to sorry, not there. Change it from simple 2-period moving average here to exponential moving average or whole moving average, okay? Or over here if you want, or the time frame from 10 to 40, okay? And then you have your own brand new that fits exactly what you want and not what I want. There you go. Okay, so now let me give you another variation on this. Little tweak each time. Maybe you're looking at this and going, you know what? And let me switch this back to, I'm going to make this weekly. Okay. So here's our scan. Here's our weekly results. And you're going, well, I only got 3 results. I want more results. And I don't really care if it crossed today, or this week, but I want in the last maybe 4 weeks, I want to see that cross. Can you do that? Yeah, you can do that. How are you going to do that? Go up here. Dude, we got the same thing we just did. I'm just going to edit it. Click on the little gear. Move this over. Edit. Now we're going to get to some of this other stuff down here. Notice this says within 1 bar. Well, how long is 1 bar? For our purposes now, we're talking about a week, because I changed this to a 1040 week crossover. Okay? That's a 1040 week crossover. So 1 bar, which is the default, means in this week's candle. But if I up this, let's say to 4 bars, that's going back looking at the last 4 weeks worth of candles for the SMA, the 10-period SMA crossing above the 40-period SMA. Save. Okay. Run this again. Notice we got more results. Let me try Microsoft and Ulta here. Those are some names we're all familiar with. Here's Microsoft. Now, I'm going to zoom in just a little bit so you can see it a little better, okay? Let me clear this drawing set. All right. Now notice, did it cross today? No. Or this week? No, it didn't. It crossed 3 weeks ago, or a couple, I don't know how you count it, 2 weeks ago, it crossed. So by expanding it out to a longer time period, I'm able to get more results. Now, that's good or it's bad. I mean, it's bad if you want the fresh cross. Now, you no longer have the fresh cross there. Okay, it's a little dated here. But it also expanded what my to some that maybe still look good that I want to look at. Here's Alta. I like that Microsoft chart a little better, to be honest, here in terms of what the trend has done. But there you get the point. So earlier when I pulled up those first ones, it was kind of like the stock was like this for 3 years. Maybe not. But this actually has done pretty well here. Okay. This is to Wiley. Okay. At this here. Okay. A little bit of a wedge on that. The wedge generally, by the way, little tangent here. When you have a wedge like this and it's preceded with an upward trend, I realize I'm marking so much on this chart, it's probably hard to see at this point. When you're preceded by an uptrend, here's my uptrend, this arrow. When you get the wedge like that, generally it's perceived to be more of a bullish pattern. Of course, you could still wait for the breakout. To the downside would be more bearish. To the upside would be more bullish. Okay? All right. Now, let me go and clear out this guy here. Okay. Let me go back to my scan. And let's edit this here. Okay. Now, I'm going to make this day again. I'm going to edit this and move this over. Edit. Okay. So yeah, I want you guys to practice doing your own scans. Now, some of you are looking at, who was that? Mike said, what about this offset here? So in terms of this moving average crossover system, I can't think of it using the offset here in this. But let me give you an example. So, because I think it's pertinent to what we're talking about here, of when I may use offset here. If I'm doing this, and let me just think about this for a sec. I want to look at, let's say I want to find something that crossed the moving average. This is going to be a kind of a bad example because I'm just trying to think of it off the top of my head. Here's the difference of the two, though. Let me just kind of say that in general, the difference of those two. The within says, if I have a crossover, I'm looking, let's say we go over the last, well, this is weekly data, the last 4 weeks. Any time in the last 4 weeks would be within, okay? Any time in the last 4 weeks would be within. But if I say offset and I go back 3 weeks, it's not saying any time within the last 3 weeks or 4 weeks or whatever. It's saying skip the last 3 weeks, go to the one before that. That's going to be the offset one there. Okay? That's going to be the offset one. So, so let's say I'm trying to, because I've used this before quite often, the offset, and I'm just trying to think off the top of my head when I'd use this. But if I want to see, let's say just a simple, the stock, has been above that moving average any time over the past month, okay? Well, let's do it. Let's run a scan. Let me add a filter on here, study filter, and I want the stock to have been above the 20-day moving average sometime in the last 10 days. Okay. So what I'm going to do is I'm going to edit this. I'm going to say the stock price, so I'm going to go down to price, is greater than, I want it to have been greater than the moving average a week ago. That should be price, close, is greater than a moving average, simple moving average. I want a stock that's been greater than the 20-day moving average. We'll say, let's say 5 days ago, but look at this, what I'm going to do. I'm going to say it was greater than the 20-day moving average 5 days ago, but it's no longer above that. Let's do that. I'm going to add a condition. I'm going to do close is now less than the 20-day moving average. Simple moving average. Oops, not there. 20. Okay. So now what do I have? I have a stock that we know was 5 days ago above the 20-day moving average, now less than the 20-day moving average. Okay? So that's an example. It's not the greatest example because it's not that it's not what I would maybe normally do. There's probably easier ways to do it. You could just say it crossed below the 20-day moving average of the last 5 days. But there'll be some circumstance where you want to look 5 days ago, not within the last 5 days, but 5 days ago. That's what that offset does there. So now if I scan this, these results should be below. It's thinking. I don't know why it's taking so long. Let me reduce that subset maybe to I don't know why that's taking so long. There we go. Okay, so Amazon, let's take a look. Let me go to a daily chart. Okay, here was, let me edit this to 20-day. 20-day, okay. And there was our 20-day. We're above it at some point there and crossed below it there. Oh, Amazon. It's supposed to be on Amazon. AMZN. There we go. That's better. Crossed below that moving average right there. Okay? All right, let me just double check questions and finish up here. I'm running out of time. Let me just see if there's anything else I wanted to hit. Okay, I think I've gone through most of the stuff I want to do. Okay. Let's see. So good questions, everybody. Thank you. So that's what the offset is. And can you use a user-defined study? Yes, you can use user-defined studies here. So in other words, if you go to scan, when I added that filter on there, that study filter, I used preset studies, moving averages, for example, RSIs, whatever you want. But if you go to user defined, these are 3 I created of my own. Okay. Can I use those? Yeah, I can use those. Absolutely. Good question there. Okay. So I appreciate you guys. Thank you very much. And I'm just about out of time here. So I think I'm going to call that good. This is just my whole purpose today, folks, was just an introduction, just getting you started to think about, get your mind, it's a different mindset. It's, kind of creating these new things. I think personally, scans are the easiest way to go in terms of learning this kind of, getting the mindset of doing your own scripts here. Coming up next week, Mike should be back, I think, doing a ThinkScript at that point. But coming up next, we've got a new session for you, folks. Market movers. It's kind of the end of the week wrap up. Great way to finish off the week, I think. Thank you, Kevin, for helping me out in the chat. Kevin's always wonderful help. And thank you each for joining us. Make sure you subscribe to that Trader Talks channel. And everybody, have a nice weekend. Bye-bye, everybody.